Hello and welcome to this PowerPoint presentation. Today our discussion will focus on the future of financial statement preparation, and we will look at several technological innovations that are impacting the accounting profession. We are living in an extraordinary time of digital change. Changes in both the work that we do and how we get it done has become so commonplace that it is difficult to understand what to do to avoid being left behind. In this presentation, we will look at how many of the accounting processes and financial reporting efforts are currently being disrupted by new technologies. We will also look a bit futuristically at some specific technology influences and innovations that many believe will be significant, even transformational to the financial statement preparation processes. I am Mark Hamilton, and currently I work as a technologist and strategist in my role as CFO and Treasurer for CDG Engineers and Associates. During my career as a CPA, I have worked in public accounting with Deloitte & Touche and with KPMG, and have served in business and industry in both publicly traded and privately held companies as the Senior Tax Executive, the Senior Risk Management Executive, Treasurer, and CFO. My career of over 25 years began just as PCs became a transformational tool for our profession. Throughout my career, I've had the opportunity to serve as a technologist with each of the organizations that I have worked with. My passion for new technology developments has positioned me to lead many significant technology process improvement efforts. During this period, we have seen dramatic transformation in the accounting profession. However, I suggest that as fast as the pace of change and disruption seems today, it is as slow now as it will ever be in the future. There are several exciting technologies that are maturing in a convergence that will impact society in ways that we cannot yet imagine. I look forward to sharing this conversation about financial statement preparation of the future with you. I hope you will gain better insights into the advantages that can be created by developing a digital mindset, adopting technology, and implementing new practices. To get started, let's take a moment to define the primary learning objectives of this presentation. I would like to start with a brief review of the history of financial reporting and the accounting profession. This discussion is intended to emphasize the correlation of technology to the advances in value creation that our profession has experienced. In the rapidly evolving business environment today, more than ever, our profession is experiencing a shift in the role we have traditionally played, focused on financial reporting, to one of greater value, which is focused on analytics, strategy, and decision support. As our next objective, I would like to establish a framework for what financial statement preparation and reporting of the future will demand. We will identify key attributes that will provide us insight and direction for understanding changes that may add value to the processes we use in our traditional financial reporting roles. This discussion offers us a significant opportunity to begin to develop a think digital mindset. The AICPA offers a continuing professional education course titled Developing Your Digital Mindset. This course focuses on the cultural implication of creating a digital mindset. It states that the idea of a digital mindset involves seeking to implement and embrace effective digital solutions in as many areas and interactions as is possible. The immediate need to think digital first is nowhere more impactful in an organization than in our accounting and reporting processes. Organizations can manage the risk of being left behind by strategically shifting to a culture that thinks digital first. We will build this framework of understanding by looking at the key elements of reporting 2020 and beyond, and then diving into deeper discussions on key technology innovations and key technology influences. We will then conclude by looking at how to establish priorities for how CPA should approach these opportunities. I hope you will find this information interesting and insightful. Above all, I hope you will find it inspirational to you to develop your digital mindset. Let's begin our discussion today with a brief historical review of financial reporting. Since the origins of written language, civilizations have used accounting methods to track transactions and keep data organized. The first narrative ledgers date back to over 2,000 years BC with the emergence of barter and trade systems. As society adopted the use of currencies as a means of trade, the single-entry narrative records became insufficient. In 1494, Italian monk Luca Pacioli laid the groundwork for modern accounting with the publication of a textbook which showed the benefits of a double-entry system for bookkeeping. Moving forward into the late 1800s, the Industrial Revolution and the appearance of corporations in America became catalysts for transforming the bookkeeping methods. The necessity to protect the public interest and standardize financial reporting resulted in the creation in 1896 of a formal profession of accounting, and the CPA credentialing process was first recognized. This was followed by the establishment of formal accounting practices and reporting standards. Over the next 125 years, our profession moved from using simple adding machines through the introduction of the first IBM computers in the late 1950s to the realms of computer software and hardware and the use of the internet that we have today. Over this period, our profession has learned to embrace technology tools as a foundation of efficiency. Electronic ledger systems and report writing tools for financial reporting have been mainstream since the introduction of personal computers. Today, it is very difficult to imagine how we would perform our reporting functions without these technology tools. Now let's think for a few minutes about the traditional financial reporting framework. We generally think of financial statement preparation as the process of organizing data from the trial balance into three prescribed financial statement formats: the balance sheet, the income statement, and the cash flow statement. This effort doesn't seem so difficult when stated so simplistically. However, what we know from the practical perspective is that this exercise is very challenging even in small companies. The organization required to prepare financial statements involves a complex and tedious series of activities. We are required to accumulate and assimilate diverse data from multiple sources while continually maintaining controls over the processes to minimize opportunity for error or fraud. Add to this effort the technical challenges of ever-changing standards and rules and the constantly evolving business transaction environment, and it is very easy to understand the necessity of technology efficiency. In May of 2019, Wesley Bricker, the SEC chief accountant, spoke on the future of financial reporting. He stated that technology is a prominent force that has been a catalyst of profound changes to business models, business process, accounting, and auditing. He further stated that this can be demonstrated by recognizing the substantial amount of capital investment that the technology sector has attracted and an understanding that it represents a significant share of the economy. Since its invention in 1989, the World Wide Web has exponentially expanded the reach of information technology and has transformed the world and business. For example, as of March 2019, the S&P 500 index included 68 companies belonging to the information technology sector, representing 21% of the S&P 500 companies' total market capitalization. These statistics are significant, yet they understate the impact of technology in a sense because they do not capture the effect of technology in transforming how companies in other sectors do business. They also illustrate the pervasive and fast pace of change in technology, which also affects how investors and users access and process financial information. The SEC itself demonstrates the impact of technology as its IT systems provide critical services to the markets. On a typical day, investors and other market participants access disclosure documents through the Electronic Data Gathering, Analysis, and Retrieval System, or EDGAR, 41 million times, and that is in a single day. The opportunity and benefits of technology provide also come with risks and complexities. For example, data security and privacy concerns are coming to the fore. How we respond to these challenges will have a profound effect on our capital markets. As such, we need to understand these changes through the lens of our capital markets, particularly in their impact on financial reporting. Adequately preparing the next generation of accounting professionals for such challenges will be critical to that understanding. Now let's take a look at how accounting teams spend their time. A recent Deloitte survey publication reviewed the focuses of how accounting teams spend their time. The survey reported that accounting teams currently spend roughly half of their time creating and updating reports, but that they would prefer that they spend only about 5% of their time on these tasks. It also found that there is a desire to reduce the amount of time spent analyzing and interpreting the information that is being reported. The primary driver necessitating this change in resource utilization is the desire to be able to focus approximately 70% of the accounting team efforts on interacting and communicating with the business. Communication and collaboration are recognized as drivers of effective organizations, and accounting teams have desire to provide greater focus and insight. Henry Ford is often quoted as saying, "If you always do what you've always done, you'll always get what you've always got." Recognizing the truth in that statement, our profession is challenged to turn to advances in technology to change what we do and how we do it. The future of financial statement preparation must focus on efficiency and shifting the use of resources from the compilation efforts to new methods of communicating information throughout organizations. The value of the new methods of communication come from facilitating better decision making. Let's take a look at defining financial reporting for 2020 and beyond. First, let's think about the internal reporting focus and the idea of having the ability to make decisions based on quality, real-time data. The importance of real-time cannot be overemphasized. Financial reporting generally has been based on historic, descriptive perspective, typically reported prior period, prior quarter, or prior year. This has been necessitated by the resources needed to ensure quality data is reported. As our systems have become more robust, we have recognized the competitive advantages that are gained from the improved timing of information. The timelier insight leads to better decision making. External reporting focus is driven by creating efficiency both in the speed of preparation of externally reported financial statements and in minimizing cost and resource commitments. However, external reporting demands significant attention to maintaining accuracy and control. The solution to addressing these shifts in focus is to embrace the digital transformation. In the report Finance 2020, Death by Digital, David Axon stated that finance is evolving from an expense control, spreadsheet-driven accounting and reporting center into a predictive analytics powerhouse that creates business value. In the Deloitte publication, Reporting in a Digital World, it is stated that the laborious grind of management and financial reporting today likely won't exist in the future. People will be insight generators, not report builders. Deloitte states that in the future, financial reporting will be intelligent, financial reporting will be interactive, and financial reporting will be real time. Let's take a look at clarifying what each of these entails. In the publication Reporting in a Digital World, Deloitte suggests that reporting in the future will become more intelligent. The focus of intelligent technology will be to improve the user experience. Consider applications that will learn users and will get to know what they need and want. These technologies will also become able to take over redundant and repetitive reporting grunt work. Much of the writing of reports, particularly the first drafts, will become completely automated and will happen without human involvement. Deloitte also suggests that this type of intelligent reporting will be more prescriptive. Let's take a look at what this suggests. Our traditional financial reporting is based on descriptive analytics, which has provided insight into the past and answered the question, what has happened? We have also routinely used predictive analytics for modeling, forecasting, and attempts to understand the future and answer the question, what could happen? Intelligent technology will allow us to now include prescriptive analytics into our reporting. This type of analysis uses optimization programming and simulation algorithms to advise on possible outcomes and answer the question, what should we do? These type of tools will reshape the future of analytics and will enhance the quality and value of financial reporting. All the while, the expectations for insight will continue to increase. In the report, Deloitte also suggests that reporting in the future will require that reporting will become more interactive. This idea suggests transformation in financial reporting will change how people in business interact with the reported information. The methods of interactive reporting will allow users to use a variety of devices to navigate information at their own pace and in any way that they want. The reporting tools will also become more interactive, allowing users to interact easily with the reported data. Bots or autonomous programs on a network will be developed to interact and query databases to get information on demand in the ultimate self-service type of experience. Users will have their own unique and interactive dashboards, and much insight will be focused on exception-based reporting where programs learn rules and identify information requiring attention. As this transformation occurs, much of the infrastructure in place for traditional reporting will become obsolete. Lastly, Deloitte noted that reporting in the future will become more real-time. As I noted earlier, the importance of real-time reporting cannot be overemphasized. Automation helps simplify and streamline data management because data used in reporting is no longer prepared for analysis manually. Software does that work. Preparation will happen automatically as transactions occur, freeing accounting analysts to focus on communicating what's hidden in the data. In addition, almost no time will need to go to reconciliation. By providing entire organizations with a single cloud-based source of data, all business functions will be able to operate from the same reliable starting point. Real-time reporting will arrive when all aspects of the reporting process become automated and streamlined. The biggest barriers to real-time reporting today are establishing data quality and addressing latency, both of which contribute to the lack of timeliness. Let's take a closer look at several of the key innovations and influences that are facilitating this evolution in financial statement reporting. New technology is being deployed throughout organizations to help use information more efficiently and drive better decisions. Key technology innovations are focused on developing automation, primarily using algorithms and artificial intelligence. Most accounting teams have yet to put it all together, but several digital drivers are showing early signs of adoption. Among these that I would like to share with you are data visualization, chatbots, big data and artificial intelligence, robotics process automation or RPA, and predictive analytics. Let's discuss each of these for the next few minutes. Data visualization uses technology to communicate information using images, pictures, and infographics. No longer is this visualization limited to the use of simple Excel charts and graphs. As ever-increasing volumes of both structured and unstructured big data force organizations to use new methods to report complex data in a usable format. The adoption of visualization tools capable of using data such as GPS data, photos, videos, search queries, or a variety of types of data sets is increasing quickly. These visualization techniques enable ideas and trends to be communicated much more effectively. Visualization tools are already available and are impacting financial reporting. Among the currently most known and used tools are Tableau, Click, Power BI, and Domo. Visualization is very powerful because for most people, visualization is one of the best ways for our brains to comprehend data. Visualization increases understanding and can lead to better decision making. In a report by Oracle and the AICPA, Agile Finance Revealed, the new operating model for modern finance, 4 keys to successfully deploying financial reporting visualization are identified. These keys are a recommendation to start with an investment in a solid ERP system that is capable of creating a single source of readily accessible data. Next is a recommendation that you spend time anticipating and understanding what you want to accomplish. Consider if your primary need is to emphasize declarative or exploratory insight. You should also be sure to be able to identify your audience and understand the level of detail that they will need to support the visualizations that they will desire. Finally, it is recommended that you don't forget to focus on training and development of the competencies of the accounting team. Reskilling the staff to be productive in a digital environment will be crucial to success. The use of chatbots, or computer programs with functionality like what is now available to consumers using intelligent assistants on devices such as Google, Siri, or Alexa, is now becoming reality for specific business applications. As the use of these tools has taken root in the consumer market, business functions such as accounting tasks are gaining interest in utilizing the technology. As we become more and more comfortable talking with machines, there are significant application interests for many different types of commercial chatbots. Commercial chatbot development platforms are now available. These platforms allow for development of programs that use natural language processing to interpret voice or text and perform functions such as analytics, education, or communication. Early adoption and use of chatbots is being seen in customer service in the banking industry, in scheduling and patient logistics in the healthcare industry, and in R&D of educational toys. Not so far in the future, envision talking to your ledger to record entries or document variances. According to Gartner, a leading information technology company, big data is defined as high volume, high velocity, and high variety information assets that demand cost-effective, innovative forms of information processing for enhanced insight and decision-making. Big data analytics is the complex process of validating and vetting, transforming and modeling diverse big data with the intent to support decision-making. A primary application is the prescriptive analytics, or deciding what we should do. There are practical applications of big data analytics usage in financial statement reporting and auditing practices. Continuing research and development, along with the convergence of other technology advances, suggests significant change may occur as efforts are aimed toward continuing to improve the efficiency and effectiveness of financial statement reporting and audits. Big data conversations include focus on understanding usages of predictive analytics, designing applications, and the use of tools such as Hadoop and MapReduce. A simple Wikipedia definition defines Apache Hadoop as a collection of open source software utilities that facilitate using a network of computers to solve problems involving massive amounts of data and complex computations. It provides a software framework for distributed storage and processing of big data using the MapReduce programming model. Hadoop was originated from the Google file system and has been in application for over 10 years. For more information on this topic, there is an 8-hour continuing education course developed by the AICPA, which I present, titled Analytics and Big Data for Accountants. Please see your state society for a schedule of availability. Artificial intelligence is technology, primarily programming, that allows the machine to function as in an intelligent manner. These intelligent machines become able to work and react like humans. Artificial intelligence can identify transaction patterns and understand what normal transactions look like. With this, it can quickly identify abnormal data and errors. AI will drastically improve audit efficiency as it makes it possible to audit 100% of transactions instead of a sample. In a June 2018 Forbes article, The Digital Transformation in Finance and Accounting, Artificial Intelligence, Robots, and Chatbots, Bernard Marr noted that accounting and finance professionals should anticipate the reality of the fourth industrial revolution, when machines take over repetitive, time-consuming, and redundant tasks and allow accounting professionals to focus on higher value analysis. Advances in AI have become a competitive advantage. Robotics process automation is a specific use of AI. RPA focuses on the automation of repetitive processes and rules-based reporting processes to reduce costs and improve efficiency. Software can now incorporate RPA to handle basic accounting tasks, such as bank reconciliations, invoice categorization, purchase order matching, and payment initiation. It can also learn repetitive coding for invoices and conduct expense policy compliance reviews. RPA has transformed the process of monthly closing procedures and reconciliations, as well as preparing rules-oriented financial statements and reports. Other finance processes where RPA is being used include sales tax compliance and corporate performance management. Predictive analytics is another specific use of AI. Predictive analytics uses existing historical data to identify trends. As stated earlier, this modeling and forecasting attempts to understand the future and answer what could happen. Predictive analytics creates opportunity to better predict outcomes, identify untapped opportunities, expose hidden risks, anticipate the future, and most importantly, act quickly. A few key areas of use of predictive analytics include a significant focus of predictive analytics on customer intelligence, which dramatically improves the ability to forecast revenue growth and profitability. A focus on identifying supply chain inefficiencies, including monitoring for potential vendor issue patterns or potential equipment failures. Also, deep data scrubs, which are used to find loss drivers or indicators of changes in customer loyalty. And last, uses that are focused on continuous monitoring for fraud detection. Now let's shift to a discussion of several key technology influences on financial reporting for 2020 and beyond. We need to recognize that FinTech is redefining methods of transacting. Also, that blockchain and smart contracts are transforming process and trust. Cybersecurity is now a top risk facing all businesses. The rapid change is occurring in mobility, 5G, and the Internet of Things. Companies are embracing the cloud, and there is an ever-evolving focus on everything as a service. And lastly, I would like to touch on the concept of convergence. Financial technology, or FinTech, is specific technology and innovation which disrupts and competes with traditional methods of delivery of financial services. Examples include the use of smartphones for mobile banking, the continuous evolution of investing services, and the recent introduction of cryptocurrency. FinTech companies consist of startups, established financial institutions, and technology companies that are trying to replace or enhance the usage of financial services. Businesses are establishing FinTech-centric treasury management systems to efficiently manage systems interacting and collecting data in a real-time environment. The implications of FinTech on financial statement preparation are focused on the added complexities that new methods of transacting and new methods of payment have on our evolving data sets. FinTech is the recipient of significant R&D investment and has been a first mover relative to many technology innovations. I would like to now talk with you for several minutes about the emerging technology that some believe will be as transformational to society as has been the internet. That technology is called blockchain, or distributed ledger technology. The specific impacts from the application of DLT to the accounting profession may be as dramatic as what the internet has caused for communications and media industries. A primary benefit of blockchain technology is that it transforms what is required for trust in transacting. There is currently extensive application in creating digital currency, logistics and supply chain applications, and in a variety of smart contract applications. Many suggest that the potential disruptions in banking and finance will redefine financial commerce of the future. Let's understand what blockchain is. Blockchain is a decentralized ledger of all transactions maintained across a peer-to-peer network. Participants can transfer value across the internet without a trusted third-party intermediary. For a transaction to be valid, all participants must agree on the validity, thus providing consensus. Recorded transactions are immutable, meaning that no one can tamper with the transactions after it has been recorded. And these transactions provide finality in that a single shared ledger provides one place to go to determine ownership of an asset. Blockchain technology is the most efficient method of processing transactions as it eliminates task redundancy and significant reconciliation costs that are necessary where intermediaries are required to form trust. In a recent article that I published, Blockchain, Distributed Ledger Technology, An Introduction and Focus on Smart Contracts, I discuss how the rapid evolution of the blockchain and distributed ledger technology and the associated applications will require many changes in the way business is transacted and how transactions are recorded. In describing the distributed ledger technology as an adaptable database tool, I suggest that in its simplest sense, blockchain represents a new adaptable database that offers a method for creating transaction ledger entries, vetting and validating the transaction entries, and storing them in a tamper-proof ledger. The unique value created by the use of this tool is that after posting an entry to the blockchain ledger, the technology transforms what is required to trust the validity of the change in the ledger balance. Historically, accountants have managed ledgers using double entry accounting and relied on third-party intermediaries such as financial institutions to transfer funds. These processes mandate trust in the intermediary and require continuous confirmation and validation of balances. The blockchain ledger technology uses cryptography, hashing, and algorithms for proof of work in a process referred to as mining, creates a new form of digital currency from the tokenization process, and introduces new method of storing immutable data in a distributed ledger. These attributes change or eliminate the need for trust. As I stated earlier, there are many that believe the blockchain has the potential to do for transactions what the internet has done over the past 30 years for information and communications. Undoubtedly, anyone in the accounting profession has a vested interest in education on distributed ledger technology and must keep updated on this critically important, currently emerging technology. Let's walk through a simple diagram of the steps in a blockchain transaction. The first step is that a transaction is requested. The transaction is then broadcast to the nodes in a peer-to-peer network. Nodes use a hashing algorithm such as SHA-256, which is used in the Bitcoin blockchain network, to vet and validate the transaction. The use of the algorithm is a method of cryptography that verifies the transaction. Verified transactions then become a new block, and the new block is added to the existing distributed blockchain. At this point, the transaction is complete. Let's also define a smart contract. A smart contract is derived from the ability to use programmed automation to affect the exchange of money, property, or other items of value without conflict in a transparent method that requires no trust services of a middleman, such as a bank or attorney. Smart contracts are differentiated not only because the contract defines the rules and penalties contained within the agreement, much the same as a traditional contract does, but that it also is designed to automatically enforce those obligations. Smart contracts can be described as a series of programmed steps where a record of an asset or currency is transferred into a program, and the program at some point automatically validates a condition and determines whether the recorded assets should go. By recording the movement into the decentralized ledger, the transfer is stored and replicated, giving it certainty, security, and immutability. Because of the efficiency in cost and time and the elimination of mistrust between the parties, smart contracts are of intense interest to all global businesses in all industries. There are numerous exciting blockchain developments ongoing. Potential applications and their focus include financial services, where the benefits of broader funding opportunity and faster, cheaper settlements are of intense interest. Imagine tapping into a global unbanked funding sources market and then having a system that allows for near real-time settlement of transactions without the necessity of an intermediary. In the healthcare industry, there is focus on patient encrypted healthcare information and on faster processing of billing claims. In voting, there is an interest in creating mobility for voters and for immediate verifiable results. In logistics, early adopters have already begun to realize the efficiency and absolute tracking that is available through blockchain in their supply chain. The smart contract and DLT have proven to bring immediate value to supply chain management. Creating an immutable chain of custody involving the flow of goods from raw materials to finished product has tremendous impact on many industries. Using smart contracts to record changes in ownership rights as items move through the supply chain allows certainty in confirming who is responsible for the product at any given time and creates an absolute auditable trail of origination. Moreover, the efficiency in record keeping allows opportunity for dramatic improvement in customs regulation and the flow of international trade. In the insurance industry, the interest in establishing automated contracts and seamless claims processing. Envision insurance claims process triggered automatically when you're involved in an accident. The smart insurance contract would recognize the event and begin the claim, capturing all the specific details such as police records, extent of damage, and repair logistics that would be recorded on the blockchain to determine the exact amount due and trigger execution of payments to the parties. There is also significant interest in the public sector, focusing on establishing efficient, immutable asset registries, such as land or corporate shares databases. In the financial sector, there has also been significant interest in emerging applications in efficient mortgage approval and loan servicing. Here, the smart mortgage contracts will automate connecting the lenders and borrowers and perform underwriting functions in an efficient and less error-prone process. Servicing contracts can be an automatic process for making payments, managing escrows such as insurance or property taxes, and updating property records and liens. Lastly, and most specific to financial statement reporting of the future, is the applicability to recording and reporting financial data. Financial record keeping and reporting will utilize smart contracts and DLT for improvement in accuracy and transparent financial data recording. The B2B ecosystems being developed will ultimately provide an ability to eliminate banks from the daily application of trade finance. The immutable ledger will allow for vendors and customers to coexist and share one ledger. My AP becomes your AR. The smart contract that allow the functionality to integrate will continue to evolve. But there are too many value creation elements: efficiency, cost, immutability, and simplicity in verification and reporting to restrict the progress of evolving implementations. Transactions and methods of transactions just into the future are emerging and being defined. Let's now turn our attention to discussing cybersecurity. Cybersecurity is the protection of internet-connected systems, including hardware, software, and data from cyber attacks. A cyber attack may involve identity theft, extortion attempts, or the loss of important data, or they may potentially impact critical infrastructure like power plants, hospitals, or financial services companies. Loss of important data includes financial data and ERP systems. A successful cybersecurity approach has multiple layers of protection spread across the computers, networks, programs, and data that one intends to keep safe. In an organization, the people, processes, and technology must all complement one another to create an effective defense from cyber attacks. Key cybersecurity functions include detection, investigation, and remediation. I cannot overemphasize the importance of cybersecurity. I would recommend that every finance professional and CPA, particularly, fully educate themselves on the world of cybersecurity. The AICPA offers a very good 8 to 24-hour continuing education course program that will provide valuable insight. I would also recommend that anyone interested in working with this to assess cybersecurity within your organization should take a look at the NIST Cybersecurity Framework. This documentation can be found at nist.gov. This framework is an organized structure for evaluating cybersecurity holistically for an organization and is directly applicable to all functions and business units. Please visit your state society website or AICPA.org for more information on the available cybersecurity educational content. Again, I cannot stress enough the importance of gaining high priority for cybersecurity. In the global business environment that we operate today, big data, the systems that we manage our data on, and the interconnectivity of our technology infrastructure have been critically valuable. In January of 2018, our infrastructure was attacked and significant data was held ransom through the use of a ransomware bug. The experience was horrific, but taught me many lessons and gave me an appreciation for the need for education. One of the most important lessons is that you cannot ignore the problems and assume that they are problems of others. It is imperative that leadership proactively and continuously assess risk and invest in protection. We must train employees and instill a culture that prioritizes cybersecurity importance. Let's now take a look at the influence of connectivity. The concept of connectivity is mainstream. Devices are abundant and almost always seamlessly connected. Users have ease of use and have experienced the evolution of the app society. The interconnectivity flexibility has transformed jobs and work environments. The IoT, or Internet of Things, is all about adding an IP address to everything. This environment is made up of devices from simple sensors to smartphones and wearables and is interconnected throughout the cloud. This ever-growing network of devices now includes vehicles, appliances, components, and machines, and they are all interconnected to the internet and generating value and opportunity for companies. One significant impact we are experiencing is the dramatic impact on the extension of the business network for employees to move and be mobile and use their own devices. They're also experiencing borderless networks and a never-ending evolution of the app economy. To help put this in greater context, let's recognize that today there are about 7 billion non-phone or laptop devices which are primarily sensors. These sensors are in everything, and they are controlled by apps that operate on smart devices. When we consider the continuing growth of sensors in a world with maturity in driverless transportation and high-end drone technology, it is understandable that the use of sensors is likely to triple within the next 5 years. As related to financial statements and the implications for accounting, some futurists suggest that IoT to IoT transactions in a distributed ledger environment may create new forms of payment and credit management. A final piece of the technology puzzle in connectivity is related to the promise of 5G. The path to 5G is well underway. 5G will evolve wireless connectivity with promises of greater coverage, greater flexibility, and speeds up to 100 times faster than our current 4G infrastructure. Many feel this technology is critical to the success of mass utilization of technologies such as augmented reality and self-driving vehicles. It is estimated that there will be large-scale and significant, impactful 5G applications in existence within the next 24 to 36 months, particularly within large urban populations. We should keep in mind that the IoT is moving to a time when there will be a smartphone type device in every hand worldwide. Cloud and cloud conversations have also become mainstream, and wide application is in place. The cloud facilitates rapid implementation of systems, reduced infrastructure costs, and significantly improved flexibility. Cloud-based systems enable an organization to manage data and process efficiently, and they help facilitate collaboration across different functions. The cloud also provides a common platform that enables big data analysis of so many different unrelated data pools to identify trends, patterns, and develop insight. Let's look at key computing services that are accessible in addition to performance of analytics in the cloud. First is Infrastructure as a Service, or IaaS. This is opportunity to rent IT infrastructure, servers, virtual machines, storage, networks, operating systems from a cloud provider on a pay-as-you-go basis. Next is Platform as a Service, PaaS. Here, cloud computing services are made available that supply an on-demand environment for developing, testing, delivering, and managing software applications. It makes it easier for developers to quickly create web or mobile apps without worrying about setting up or managing the underlying infrastructure of servers, storage, networks, and databases needed for development. The last is the idea of the use of Software as a Service, SaaS. This is a method for delivering software applications over the internet, on demand, and typically on a subscription basis. Cloud providers host and manage the software applications and the underlying infrastructure and handle any maintenance like software upgrades and security patching. Many existing implementations have occurred, and the use of this evolution is likely already impacting financial statement preparation tasks and processes in your organization. However, there is an ongoing cost-benefit analysis due to the investments in the existing infrastructure, and hybrid environments are continuing. I would like to conclude this portion of the presentation by asking you to take a moment to think about how impactful any one of these innovations or influential technologies may be on its own. New technology is empowering transformational change in the way society transacts. Think for a moment about the maturity and convergence of these influences and innovations that we just reviewed. Imagine financial statement preparation in the future when the productivity and efficiency converge. We will be given the ability to develop and implement artificial intelligence and utilize robotic processing in a wireless 5G environment of absolute connectivity and mobility. Advances in apps and the application program interfaces in conjunction with standardized smart contracts in a blockchain environment will transform business operations and create competitive advantages for early adopters. Realize that the convergence of these technologies at the same point in time has the potential to transform accounting, finance, and business processes in ways that we have yet to conceive. We are truly living in the information age, and these are very exciting times for our profession. As we begin to conclude our discussion, let's think for a few minutes about the priorities that you should address as you think about the future of financial reporting. The Deloitte publication, Reporting in a Digital World, provides great insight and recommendations for how to get it right. Deloitte suggests that you should first devote attention to updating your IT operational model and get ready for the new digital norm. Look to simplify your legacy systems, embrace software as a service and the cloud, and begin to adopt robotics and AI. Next, you should commit efforts to building your technology capability so that you can get more intelligent about your opportunities. Prepare your networks and systems architecture to be ready to connect to anything, anywhere. And you can never pay enough attention to cybersecurity. Lastly, you should make sure that you have the necessary talent and skills to execute this vision. Reporting in a digital world offers great insights for people lessons in order to get it right in the digital evolution. The first is to focus on customers, especially the user experience. Earlier in your journey, explore what-if questions with key audiences. Ask them how they might use information differently if their reports were more intuitive, more visual, more proactive. Build in formal and informal mechanisms for generating feedback. Create user personas and watch what your people actually do. Next, you should show and not tell. You can talk for hours about how a new approach to reporting would be different or better, or you can show someone in a minute or two what those differences really look like in real life. Get your hands on some prototypes and don't overpromise. It's easy to get carried away when exciting new technology arrives on the scene, but it's often a mistake. It's better to downplay the expectations and have your customers pleasantly surprised. Next, you should always reassure your people. A shift to automation and cognitive technologies can threaten those doing jobs the old-fashioned way. Make sure your people know there's more valuable role ahead for those that adopt and certainly for those who lead this change. Next, let's talk about the technology lessons that must be addressed in order to get it right. The first recommendation is that you breathe. The process of recreating your ledger and your reporting will be very frustrating. You will try things, you will need to improve, and then you will try other things that are new. You must get used to this change. The next item is that you get your data house in order. Finance data management and enterprise data management involve designing data platforms that can evolve to support structured and unstructured data. Without your data house in order, some of the reporting opportunities that we have discussed above won't be possible. The next recommendation is that you focus on small steps. Apply solutions to specific segments or functions before you try to implement more broadly. Look for high-impact use cases to build a base of advocates. For many companies, a flash sales report is a good place to start. You should also make sure to pilot a range of potential users. Span the full range of sophistication among those who will eventually use your technology. And now some final thoughts. Much of the reporting in the past has been defined by the steps required to produce the reports themselves. Collecting data, constructing reports, and then disseminating them. That's changing. In a digital world, dashboards and the digital technology do a lot of that work, which means humans get to do more interesting things. Some of those things will be the things that you want your best people working on, bringing insight to the business, creating effective stories about what information might mean to different audiences, and ensuring that the quality and accuracy of your company's data is superior. Keep these things in mind. They're important. Don't let yourself get caught up in the technology bells and whistles. Reporting isn't and never has been about technology. It's about understanding information and making more effective decisions. New tools may take some of the tedious and repetitive work out of the reporting process, but there is an indispensable role for human intelligence. Make sure your people know that. My final comment for this presentation is that we must never forget to always focus on continuous process improvement. The rapid pace of change is dramatic, and unfortunately implementations will frequently need significant technological improvement within just 18 to 24 months. Developing a digital mindset and a process for making continuous improvement and developing a culture that appreciates and encourages continuous process improvement can create significant value for your company. I would like to recognize two publications that I have used as primary resources for this presentation. The first is by Deloitte, and it is entitled Crunch Time: Reporting in a Digital World. The second is from PwC, and it is entitled Financial Services Technology 2020 and Beyond. You can also see on this slide the website addresses for each of those presentations if you would like to look at those. Thank you for your attention to this presentation today. I hope that it has been informative and you have picked up some useful insight. I would like to thank the Georgia Society of CPAs for allowing me to present this information to you today. If you have any questions, please feel free to reach me at mark.hamilton62@gmail.com.